Good evening. My name is Rick Kleinbach. I am outsourced CFO from Startup Portal, and tonight we're going through to take you through the CFO perspective of equity crowdfunding. So what I'd like to do is just walk you through some examples of, talk a little bit about crowdfunding, and then most importantly, walk you through examples and really show you what crowdfunding is all about. And obviously, as you go through here, and you have comments, just post them and we'll try to answer them. If we don't get them right away, we'll certainly get back to you. And so I appreciate everyone watching. And really, equity crowdfunding is new, came about from the Jobs Act back in 2012, took to 2015 and 16 to get started. And the reality is, quite frankly, it's essentially in its infancy, and it's really something that will be used as a tool for companies down the road, but it's still finding its own. So we're going to take you through what it's all about, and then give you some examples to highlight, what equity crowdfunding is. So as we go through, let me, certainly, put the deck so you can actually see it, and we'll just talk through it. And obviously, like I said, if you have questions at the end, feel free to yell. Um, First of all, the Startup Portal, we're based in Westminster, Maryland. We are not your typical accountants. We really specialize in outsourced financial work, helping you understand raising capital, positioning to raise capital, financial modeling, telling your story, what type of capital you need, and really we've strived to have some of the tools here to help you, as quite frankly an outsourced CFO shop with services in between that. Now, let's talk equity crowdfunding. And I use this screen a lot because it really shows you, traditionally you have an idea and you want to go to the bank or you want to go to a private equity, and you have to do that one-on-one and really talk to them and really sell your story, tell your story. And if that private equity doesn't fit, you've got to go to the next one and the next one. And really it's a tedious process. However, with equity crowdfunding, the intent is for it to be almost like a micro private equity, where the crowd can actually participate with you and allow you to raise capital in smaller increments and really utilize the crowd to basically raise capital, but mitigate the risk of having one or two or three groups all in at one point in time, and really having basically allows you to spread around at the crowd. Let's put it that way. And as we'll see, there's different types of equity crowdfunding raises. So you'll have common stock, you'll have preferred shares. We'll get that in a moment. But basically, the primary one has been equity ownership, where you own a piece of the company. Traditional crowdfunding was essentially, in some respects, goodwill. You would send in $100 and you get a T-shirt back, or you get their first product from a company. But equity crowdfunding here, truly, you get an equity piece, and we'll define that equity in a moment. And your investors are the crowd, right? But you have to go through a crowdfunding portal, and there's about 60 portals. I'll show you a few in a moment that are out there. I think they're in excess of 60 now, and it's really regulated through the Securities and Exchange Commission, as well as FINRA. And FINRA actually regulates stockbrokers. So there's an element there that the SEC and the way the rules were set want to keep that there's a compliance or a governance to allow companies to raise capital. They're not public companies. Even though you're going through the SEC, you're not considered a public company, but there's some governance there from reporting and really telling your story and checking to make sure there's what they call there are no bad actors. So it's really, established to allow people to raise capital under a certain structure. And that structure you can raise up under the regulation CF, you can raise up to $5 million in a 12-month period of time. Under the Reg A, which is the next tier, it's $75 million that you can raise in a 12-month period of time. Very hard for people to get to that 75 million, that's for sure. Not many have. Now, with that said, when you raise that capital, there's some requirements. If you're trying to raise more than $1.2 million, you have to have an audit from an outside auditor. Under $1.2 million, above I think 107,000, in between that, you want to reviewed financial statements from an outside auditor, which is less intensive, let's say. But there are some stipulations in cost, et cetera, that have an impact when you're trying to raise capital. Now, types of equity crowdfunding. As I mentioned, common stock is primarily a big one. Preferred stock is a form of stock, but it's in front of the common stock, so you have more favorable terms if something were to go bad. There are things called safe agreements, and they're essentially designed as a structure to invest in a company. However, it's not equity and it's not debt. It's almost this mid place that allows the company to operate without having the burden of debt or equity. And it converts at a certain period of time when things are, I guess, when things are favorable to both the company and the potential investors to convert out. And then the last piece, as you can see at the bottom, is revenue share, or debt agreements is another one. We'll see some debt, and revenue share is another way to do it, where you can actually participate and get your money back. As you put your money in, you get it back when the revenue is created from the company. So with that said, there's all kinds of equity crowdfunding out there, and there's certainly all kinds of portals that feed certain business models. Equity Door and Mr. Crowd are real estate related. Start Engine is a hodgepodge of everything that goes through Start Engine and WeFunder. There are a couple of the big ones. Mainvest, if you have a restaurant or a brewery. I like Mainvest because it's a debt agreement, or it's a loan where it's paid back over time. So once it's paid back, the owner keeps going on their business and the investors get their return on it. So lots of different portals. I will say, looking back years ago, basically around the dot bomb around 2000, similar nature where you had a lot of companies come right in and try to do everything, but really it's I want to say flattening out, but there's some mergers come in. I think WeFunder may have bought Seed Invest, so things are leveling off to really see what the next few years is going to look like in the ability to raise equity crowdfunding. And it's new to everyone. Part of the reason I do these seminars and a lot of the stuff the same after the same is that it's just an education, allow people to see, does this fit me? Does it fit my business model? And can I be successful with it? Now, speaking of that, does equity crowdfunding fit? And really, anytime you're raising capital, you always want to have the opportunity for the investor to see an upside. And I like to think about, does the business scale? Can the investor see a return? Can the company use someone else's capital to grow it to the next level? But so it's a balancing act. And one of the validations for crowdfunding has been, Kevin O'Leary at Kevin O'Leary, Mr. Wonderful, is a representative for Start Engine, and essentially he's been helping them, tell the story, get it out there, and he's such a known face that it really helps the industry. And he's actually done at least one crowdfunding entity of raise of himself. But irrespective, you want to research the portals. You want to make sure you have the right fit for your solution, and make sure that as you go down that path, you understand the cost, the consequences, how long people are going to be with you as stakeholders or shareholders. But the validation of the industry is important because it gives life to something that's a pretty cool tool, but it's specific to your opportunity. So, and it may fit and it may not fit. So you can't just say, oh, I can just go raise capital and everybody in the world's going to love it. Doesn't work that way. Now, with that said, Mr. Wonderful is certainly a help. But let's go into some examples here. This example is a company close to us in Maryland, and it's a place called Edmondson Village. It's about 50 years old, and it needs rehabbed. So Small Change is a real estate type of platform, and basically they're refinancing this opportunity. And what they've done is they've set it up that potential investors that are in the neighborhoods that live there can participate in it, and essentially have what's called a preferred equity ownership, which is specific return. And here they're saying 49% of cash flow and 49% of profit share I believe cash flow as it's operating and profit share down the road as they cash out. So the investors so far, there's 83 investors, and they've raised 222k, 28k. They're looking for $1 million raise, and then they're going to close it out. I think April 30th is when they close. So here, this is something that, when you think equity crowdfunding, you may not think real estate, but there's opportunities to participate in larger projects. And I think the budget on this is about 41 million, 17 to buy the property and the rehab. And they want to get $1 million for people in the neighborhood. And for me, what I like about this is that the people in the neighborhood can be potentially owners and really will be the customers of this facility as well. And quite frankly, the upgrade that they're going to do for the property is pretty significant. And the area there, certainly needs some upgrades. And even if you look at small change in Edmondson Village, you'll see they've had even trouble in this shopping center. But upgrading it and enhancing the neighborhoods, so hopefully will allow the neighborhood to improve. The next example is Skybound. So this is interesting because they are going up 75 million, which is the Reg A plus, which is the next level. They've raised 13 million, and likely through initial other raises, their valuation for this company, which may be a little generous, is about 500 million. And again, that's for the valuation experts to look at, but that's one of the things in crowdfunding that you really have to be cognizant of is if I'm putting in my money, and here I think the minimum is $500, and they're a $500 million company before I put my money, meaning pre-valuation, is there a potential return for me? Irrespective, they've almost got 5,000 people at $500 on the average. They're at about at least 2.5 million on their raise. And the one aspect here is they're generating revenue. So some, investors may see opportunity as they, basically have a sort of a Walking Dead type platform or program that people are engaged in and want to see it grow. Again, it's interesting, and you really have to do your homework and evaluation on these opportunities. The next one is a company called Here, and essentially it's an Airbnb type company. They're valued at $30 million, which seems more palatable than 500 million. They've raised 3.2 million, only $100 minimum of 3,200 investors, and they're at what's called a $3 million run rate. Is what they're saying, and what that means is that if essentially they're generating, say, $250,000 per month today, they say run rate meaning the next 12 months they'll be generating up to $3 million, 250 times 12, or it could be scaling up. But their growth rate has them looking at looking at generating revenue, which is fantastic. Now, with that, there are opportunities through a future equity called SAFE, and it was that agreement that's in between the equity and the debt that essentially says, hey, we're going to let you invest in us, and the next opportunity, and the opportunity could be additional funds coming in, or it could be we hit X in revenue, or it could be the sale of the company. We'll let you convert into equity. So that's for the future SAFE agreement. The one quirk about it is there's not a lot of ability for the investor to do much after they contribute to the SAFE agreement. So just keep that in mind. So now the next opportunities we're going to talk about are debt agreements. So this group, and we're going to talk, Honeycomb Credit is another crowdfunding portal, and I think their specialty is in the $50,000 range, the smaller mom and pops, type scenarios. And Ecotone Renewables has raised 68k, 58 investors. They close in April. They're looking for 25,124, and this is debt investment. So your $1,000 will return 1383 over a 5-year period of time. So a lot of their funding are for people, and Honeycomb, by the way, is based in Pittsburgh, so is Ecotone. But their funding is really a lot of people looking to help out companies. They'll see a return, but it's not your equity type crazy return. It's usually based on a normal, not bank rate, but a 12, 13% interest rate plus fees. So it's not cheap, but as an alternative, I love Honeycomb, especially if you go to the bank and they say, "Ah, we can't help you." This may be a great site to help you out. And essentially, they're they're looking at basically providing renewables, 40% of wasted processed foods, and helping deal with that. So it's a again, it's a balancing act between helping companies and do they have a right solution and what are they going to do with the funding. Now, the next one is called Twisted Egg Roll, and these folks, similar to Ecotone, they've raised 22,000 from 44 investors, and essentially they're looking between 25 and 124. And I just want to say a correction. When I looked at them before we went live, they were up to, I believe, 25,000 for 49 investors. Now, interesting thing is these guys close in about 4 hours. So with the equity crowdfunding campaigns, you set it up and you set a time frame, usually 8 to 10 weeks, and you push to get people to invest. Here, they're going to make their minimum threshold, but it's they still have a ways to go. Investment here is you'll get a 12.75% return from your investment, hence the 1383. So, and they have frozen egg roll products, and they're just looking to build a new space and grow their e-commerce with equity crowdfunding. So it's certainly for smaller companies a tool. And again, if you can go to the bank and you have collateral and you have a much better interest rate, but here with at least with Honeycomb, you have an opportunity if you can't go to the bank to tell your story and have people participate in your business and potentially in some respects, especially over COVID, keep your business alive. Now, with that said, some of the things you need to think about as you're doing equity crowdfunding. Are you comfortable with shareholders? You have to make sure your portals, basically fit your business model. One of the things we can help you do, and feel free to reach out, is we can help you with comparable companies that have done it already and see how they're structured, how successful they've been in raising the capital, and especially if you're a brewery or a restaurant, we can tell you who's done it, where they've done it, how much they raised, and what state. If you're a software company, we can help you look at what other people have done for software. But then I'd also challenge you to say, okay, does it fit for what you're trying to raise in capital? Because if you're looking to raise 25,000, 50,000 for a prototype or a first level, great. But if you're needing 5 million after that, you really want to think about how you structure it and what fits and what your, I always say, think of your second financing as you're doing your first. So as you're going to be needed. And then there's a marketing element to this, right? You want to listen to the marketing folks to help tell your story. And then, as I mentioned before, just looking at your store, planning for the future as you do the first one, really set yourself up for success and making sure you can raise the proper capital. And certainly, there are ways and people that have done it. One of the things, until you dig deep into other comparables, you can't tell if they've done it from spending more dollars on marketing or they've done it from their own organic growth. So it's really something you have to think about as you're looking at this process, but it's doable. So pluses and minus, overall, it's definitely a good alternative, funding. Investors, individual investors participate, and especially if you have people locally, you have a great framework, great business, you can really, pull people in. Ideas, the creative ideas that have come through that people fund it are phenomenal. One of the things, if the economy goes on a downturn, there may be opportunity here for people to invest, and they're not basically betting the farm, they're betting a small fraction amount versus, essentially private equity pouring everything into you. The downside is that the cost of capital could be between 15 and 30%, just the way you do it. Obviously, if it doesn't work out, you're left with shareholders and what you do with that element to it. But quite frankly, that's in some respects many business. It's business. So just benchmarking, make sure you're good in a good industry that crowdfunding fits is a key element. The valuations, as we saw from that company that's 500 million versus 30 million, the valuations still need some work and need to be defined. one of the downsides is that you don't have to go through a third-party valuation. You can do an internal one, and sometimes it probably needs more work before it goes out. And probably if it was a more reasonable valuation for some of these companies, they raise more money because people can see the upside. So you don't want to take the upside away from potential investors. SEC reporting, that's part of our specialty. You have to basically report to the SEC overall. So that's where you report once a year. If you're a CF, the lower level, twice a year if you're a Reg A. And then most importantly, do you want to have investors, stakeholders, investor management? That's just something that you have to think about overall as you go through this process. But there is opportunity to where you fit in equity crowdfunding. And one thing I'll note as we go, talk about what we're doing at Startup Portal is that we're helping combine the entrepreneur route, the business owner route, and hopefully, especially this year, we're really kicking off, hopefully bringing investors to help them identify companies that deserve a funding, and we can, basically put people in and meet them together and give them some good validation. Again, we're not broker dealers. We don't tell you, what you should invest in, but we're here to educate both sides of the story. And please reach out to me at Rick at Startup Portal, info at Startup Portal, if you want us to, follow along with us. With that said, we have a couple things going on. Obviously, we're that financial services company where we help with projections, cash planning, equity crowdfunding, doing our seminars, outsourced accounting services, and we do have co-working space here in Westminster, Maryland, and Cumberland, Maryland, really focused on the smaller communities. So we're really looking forward to, especially as this year goes along, providing some great education, great stories, and obviously, if you're listening and you want us to put together an analysis or help you identify companies that you can see whether crowdfunding fits, reach out to us and we'd be glad to help you. With that said, I'll throw out there, hopefully any comments or questions that can come through. Just the platform we're using is StreamYard. But if you want to reach out, info at Startup Portal, Rick at Startup Portal. Here's our phone number. And then we do have an equity crowdfunding group that you could join as well to help tell the story. So with that said, I will stop here, wait for questions. And I want to, if you give me a moment, if folks can hold on, I'll try to give you a sense of some of the data that we have that can be helpful to you overall. So I will take off my deck and then try to see if I can bring in another link to help you. I apologize, I didn't set this up in advance. Let's see here. All right, so let's just go to, we're gonna, I'm gonna share my screen. And what we have here in this screen, hopefully everyone can see it. So what we have here in the screen is the opportunity to see all of the crowdfunding data that's come through. So if you're someone that is looking for a certain industry, we can help you figure out, let's just take, I always like to do, if we can do this, we'll just leave industry. I always like to do breweries and give you a sample of the breweries that are out there. So these are breweries, a little slow, but companies that in the brewery industry that have raised capital, types of capital they're raised, and essentially we can help you see all the different portals out there. And let me take off here to see if we can get some ones that are out there doing it today. So only a few that are out there today, but you literally can click in here and you probably can't see it on the screen, but you can click on the breweries and see, how much they've raised and some details behind it out there, like Loaded Dice Brewery and Old Majestic. So for us, I'm showing you this is that if you're watching and you say, hey, Rick, I'm looking at this industry, we'd be glad to share this with you and send it over to you. Rick at Startup Portal, info at Startup Portal. But we do have some great data that we can share and help make it happen. And Mainvest, as I mentioned earlier, Mainvest is a great one for breweries, and they're very strong. So this allows you to dig in and say, hey, how much could I raise? Now, one of the things you see with Mainvest in there's no investors. That's because it's likely a revenue share agreement. So it's really a form of debt and not equity. So with that said, I probably could go on for hours and talk about this stuff. So I appreciate you staying on. We're almost at 30 minutes, and I don't see any questions. But if you do have any, feel free to reach out to us at Startup Portal, and we can go from there. Have a good day. Take care.